Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings and try to make sense of them. But this time it is going to be a little different because this company is trying to fly high but might be facing some turbulence, so strap in as we decode Aerkomm Incorporated's latest quarterly report. We're looking at the quarterly report for Aerkomm Incorporated, a company that operates in the defense and aerospace sector, and they've been busy. The report covers the period ending the 30th of June 2025, and it is packed with financial details that tell a story of a company in transition and facing some serious challenges. Let's jump straight into the numbers. On the asset side, Aerkomm has cash and short-term investments totaling over $115,000 in cash and $107 in short-term investments. As of June 2025, their inventory is just over $1 million, while their prepaid expenses are close to $240,000. What really stands out here is the other receivable from related parties, which is a massive $4.5 million. This suggests a significant amount of money owed to the company by entities it is connected with. On the non-current asset side, they have substantial investments in property and equipment and a large intangible asset worth over $10 million. A significant portion of their assets is also tied up in prepayments for land totaling over $40 million. Now let's look at the liabilities. Their current liabilities are staggering at over $70 million, with short-term loans alone being over $8.3 million. They also have substantial amounts in convertible notes and other payables. This high level of current liabilities, coupled with their cash position, paints a picture of potential liquidity concerns. Their total stockholders' equity is only about $1.5 million, which means their liabilities far exceed their equity, showing a deeply negative net worth. Turning to the income statement, the story remains challenging. For the 3 months ending June 2025, their net sales were zero compared to zero in the prior year. Similarly, service income, which comes from related parties, was also zero for the period. This lack of revenue generation is a critical point. The cost of sales was also zero in 2025, down from over $22,000 in 2024. What is really driving the bottom line are operating expenses, which were over $3.3 million in the most recent quarter, down from over $6.4 million in the prior year. This reduction in operating expenses is significant, but the company is still reporting massive losses. Their operating loss for the 3 months ending June 2025 was over $3.3 million, which is an improvement from the over $6.4 million loss in the same period last year. However, net non-operating losses were over $1.6 million for the quarter. This brings their total loss before income taxes to over $5 million for the 3 months. This is a substantial loss, and the company is paying a small amount in income tax expenses of $2,400. The total comprehensive loss for the quarter also shows a significant negative number. Looking at the 6-month period ending June 2025, the trend continues. Their net sales and service income were again zero. The cost of sales dropped to zero as well. Operating expenses decreased by nearly $5.2 million to about $6.4 million, compared to over $11.5 million in the previous year, which is a positive step in cost management. Despite this reduction, their operating loss remained high at over $6.3 million. The net non-operating losses were over $2.2 million, pushing their loss before income taxes to over $8.6 million for the first 6 months of the year. Now let's talk about their debt. Aerkomm has significant long-term liabilities, including convertible bonds and notes. As of June 2025, they have $200,000 in convertible long-term bonds payable that are due within a year, and over $23 million in convertible long-term notes payable. They also have safe liabilities, which are essentially agreements for future equity totaling over $7.1 million. This is a lot of debt and convertible instruments, which can dilute existing shareholders if converted. The safe liabilities are particularly interesting. These are measured at fair value, and the company recorded a change reflecting a gain or loss in their financial statements. As of June 2025, the fair value of these safe liabilities was over $7.1 million, an increase from over $5.4 million at the end of 2024. This increase suggests either more safe agreements were issued, or the perceived value of these future equity stakes has gone up. Looking at their cash flow statements, the picture isn't much brighter. They used over $3.6 million in operating activities in the first half of 2025. Investing activities also saw a net outflow of over $111,000. Financing activities, however, provided over $2.2 million, mainly from short-term loans and safe issuances. Despite these inflows, their cash position remains tight, with only about $115,000 in cash at the end of June 2025. Aerkomm Inc. has a complex history and structure. It started as a retail distribution company, but has shifted its focus towards defense and aerospace systems. They have multiple international subsidiaries in places like Seychelles, Japan, Taiwan, and Malta. This global footprint adds complexity to their operations and financial reporting. They have also been involved in a planned merger with Accession Corporation, which is intended to provide them with better access to capital markets. The company openly acknowledges its liquidity challenges and the substantial doubt around its ability to continue as a going concern. They are relying heavily on future capital raises, including a significant PIPE investment commitment of $35 million related to their planned merger with Accession and additional SAFE investments. They also expect a large portion of their convertible notes and SAFE agreements to convert to equity upon the merger, which would strengthen their financial position. Their plan hinges on the successful closing of the merger and the ramp-up of commercial sales. If the merger doesn't close, they are looking at short-term borrowings and other loan commitments to stay afloat. Employees and stakeholders are receiving stock options. Aerkomm has several stock option plans, and the company recognized significant stock-based compensation expense. For the 6 months ended June 2025, this expense was over $1.1 million. This compensation is a way to attract and retain talent, but it also dilutes existing shareholders. Aerkomm has significant commitments, including a large agreement with Airbus SAS for developing and certifying a retrofit solution for their aircraft. This project has a target completion date in late 2024. They also initiated an arbitration action against Shenzhen to recover 8 million RMB. This legal battle highlights the risks associated with international agreements. The management discussion section reiterates the company's strategy focusing on defense and aerospace communications with a software-defined architecture and multi-orbit satellite capabilities. They highlight geopolitical trends such as instability in the Indo-Pacific region and the conflict in Ukraine as drivers for their business. They see opportunities in unmanned systems and resilient communications infrastructure. However, they also face supply chain pressures in semiconductors and RF components which are impacting their production scalability and lead times. Recently announced tariffs add another layer of uncertainty. The early stage commercialization of their products means their results will remain volatile. A very concerning point is in the controls and procedures section. The company acknowledges material weaknesses in its internal controls over financial reporting. They state that their disclosure controls and procedures were not effective. They even had to restate previously issued financial statements for 2023 due to errors. This lack of robust internal controls is a significant red flag for investors, suggesting a higher risk of misstatements and financial inaccuracies. There was a leadership change effective the 15th of February 2025, with Jessica HSU appointed as chairperson of the board and sole director for several subsidiary companies. Now, as for my take on Aerkomm Inc, this is a company operating in a high growth and critical sector defense and aerospace communications. Their technology seems advanced and addresses real-world needs for resilient and secure communication systems, especially in the current geopolitical climate. The growing demand for unmanned systems and satellite-based solutions presents a significant opportunity. However, the financial reality is stark. Zero revenue in recent quarters, massive operating losses, and a near-bankrupt equity position are undeniable concerns. Their heavy reliance on future funding, particularly the success of the Accession merger and substantial PIPE investments, is a critical dependency. The acknowledgement of material weaknesses in internal controls further adds to the risk profile. While the strategic direction and market opportunities appear promising, the execution and financial stability are major questions. Investors need to be aware of the high risks involved given the current financial health and the significant upcoming milestones that require almost flawless execution. It is a high-risk, high-reward scenario, and right now the risk factors seem to heavily outweigh the immediate rewards. Alright, that is our deep dive into Aerkomm Incorporated's latest SEC filing. What does this mean for their future, and what are your thoughts on their strategy and financial position? Let me know in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more corporate breakdowns. Also, if you want to connect with fellow finance enthusiasts and get even more exclusive content, check out our Discord community linked in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.